Hi, everyone. It is Thursday, April 4th, 2024. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly, and here are the latest headlines. PocketHealth pocketing $33 million in Series B. Apple makes a quiet acquisition. TSX Ventures sees another tech company go private. And we shout out one round with a TechTO connection and also cover a little bit of breaking news. And as always, Alex Norman is here to break it down for us. How are you, Alex?
Great. How are you?
I'm doing great. We have a lot to cover today. Just recently, what has gone down in the news. So, big announcement from PocketHealth, I believe, a few weeks ago. Obviously, shout out to Rishi and our friends at PocketHealth for the announcement of 33 million USD Series B. So, might have given a bit of it away, but what's
That's
the
fine.
news there?
So new round was led by Canadian funds. Round 13, and Deloitte Ventures was participating. Samsung Next participated. So, and you had previous investors follow up. So raised a large $33 million Series B.
Yeah. And obviously, we're quite familiar, and we did a podcast with Rishi about just in depth about PocketHealth. But for those maybe who didn't hear about it and just want to know what they're doing in terms of health tech, what does PocketHealth do?
So they provide a very interesting solution. So historically, if you got images like you got a CT scan, MRI, X-rays at a hospital, you would have to go pay them and get a physical analog copy of those, and then you have to pack it around. So maybe you could get a CD-ROM. I think actually most recently was CD-ROM. What Pocket Health said is, this is a bit crazy. Let's put it in the cloud. So what they do is they allow patients to access their medical images via the cloud, and then they provide them with some insights based on those images.
I love that it's, again, improving access for people just in terms of controlling their outcome when it comes to health. Again, a fairly, large round. We have been seeing maybe a resurgence of these coming back, but just why, again, is PocketHealth able to pull this together?
Uh, you know, look, growth and profitability, big market.
Mhm.
What's interesting, Pocket Health is part of 650 health institutions and has more than 1.5 million patients using their software. So that's pretty big numbers. What's the business model involves working with health institutions to offer digital images to patients. And what's interesting here, it's a win-win.
Yep.
The hospitals or financial health institutions reduce cost associated with traditional analog images or CD-ROMs. They charged for it, but they were probably losing money. It was a big overhead. Now it's all in the cloud. Someone else handles it, and the other person is in charge. I don't think charges much. And Pocket Health makes money by charging patients for access. So, um, you know, they can pay for it monthly or annually.
Mhm.
It's probably a low churn rate because it's great to have access to your images.
Right.
Um,
Yep.
and they've been expanding their services and functionalities. Since we talked to them on our podcast a long time ago,
Yeah.
uh, they've added more insight. They've used AI to add more insights for patients, and they've expanded their operations to US. So what
Mhm.
you got is a company that's growing along a few different lines, seems supposedly profitable, has an interesting business model, all
Yep.
reasons to be able to raise.
Yeah. Growth and profitability. I know those were the two you called out. So important to note. And I did share the podcast when this news was announced, but I'll link it again for those who want to listen. It was quite interesting to just hear about Rishi's just unique founder's journey. I'm going to ask you now, as an investor, why would this be something that would be attractive just from the investor perspective?
There's many reasons, but I think what's in particularly interesting here is it's been very capital efficient. So
Yep.
that making every dollar go far, which usually helps get returns. And while they've got 1.5 million customers, my guess is there's a lot more patients out there getting some imaging done every year that are potential customers. So it's a massive market.
Right. And just lastly, anything just interesting that the community can learn from this round coming together?
Well, this is a B2B2C model. So they're
Yep.
selling to business who's selling to consumers. These are extremely difficult, but when all the stakeholders are aligned and get value,
Mhm.
they're very efficient, capital efficient. They're very sales efficient, and they're hard to dislodge. These health partners don't want to go back to the old way of doing business. It's because it's saving them money. It's making them more productive, and the consumers basically have it's the best choice and only choice for them when they get in there. So it's once I imagine once Pocket Health gets in the health institution, they
Yep.
very rarely churn. Um, the wedge, what's interesting is the wedge product allowed them business to raise their first round. but they've been able to expand because of growth, because of the growth, right? So like lots of times people get stuck. What's that initial market? Doesn't look big. What's that initial product? But if you can get a product, a product that gets you wedge in, and, that starts generating revenue, and you can raise money off that, and you can prove you can expand beyond the initial use case, or be it geography, be it customer, be it more products to your initial customer, you can raise money. So Pocket Health is exciting. Is they're not only growing geographically, but they have expanded product offering, which is more likely increase conversions and retention and maybe revenue per customer. So,
Right.
this initial, you think of it in the inverse pyramid of a good company. They start with a product with a small customer, certain small price,
Right.
and they keep on expanding, and sort of potential opportunity gets bigger and bigger. And lots of people forget what Shopify looked like in the first year is very different than what it was today. And many, many scaled companies, like just look at Apple, how many products and services they have. That's
Right.
$80.
So just the funnel just kind of keeps getting wider for them. And
Yeah.
obviously, as we know, healthcare is not something that we're ever not going to need. And this is, I mean, as you said, there's demand, there's growth. Obviously, all of those things are probably positive to help them achieve this. You kind of just shouted out Apple briefly, and
Yeah.
that moves us into our next headline, actually,
And
seamless
that wasn't
transition.
intentional. I would love to say I'm that smart, but
I
no.
always try and pull things to transition, but you just made that really easy. Just a layup right there for me. So, Apple makes a quiet acquisition. Don't reveal too much. I'll let you answer these questions. But
So,
what's the news and the company they acquired? Maybe you can just go into what they do as well.
so Bloomberg broke the news that Apple acquired the Waterloo-based Darwin AI earlier
Mhm.
this year. Before I get into what Darwin does, I think there's a lot of this going on. I think a lot of companies are slowly being acquired by larger companies. News is not being broken. No one's disclosing it. Companies may continue on as a product. It may be sunset, but there's not much incentive for these larger organizations or smaller organizations to talk about the acquisition. So just, I think this, why this is interesting me, I think this is sort of symbolizes what's going on in the ecosystem and not being talked about. For people that don't know Darwin AI, they're Waterloo based.
Yep.
They used AI to inspect manufacturing processes.
Cool. And again, like huge shout out to Waterloo. Obviously, that's great news out of there. So, I mean, we can probably assume that again, Apple's just obviously trying to keep up and make sure there's relevance in terms of the artificial intelligence side of things. But I guess why else would Apple want to make this
Well,
purchase?
so from what we can see outside, let's first look at what Darwin was working. Darwin worked on improving the speed and size of AI models, right? So AI models that work faster and they're smaller. Apple seems to be focused on getting AI working on the edge, or what it means
Yep.
on devices. So instead of you using a cloud and taking time and ChatGPT goes back to cloud, Apple's core product is hardware. So if they
Yep.
can get a smaller AI, can work on their devices, can make their devices more interesting and more easier to sell.
Yep.
Um, you know, it seems Apple bought the Darwin mainly for its technology and the team. So it seems like what you can see if you look closely on LinkedIn, lots of this team seems to be already working at Apple. So it looks like it's an acqui-hire plus IP purchase.
And just your take on this, does this seem like it would be a win?
I don't know. Company raised 15 million USD to date. No terms were announced. Apple does not disclose terms of deals unless they're forced to by SEC, and that means they have to be a pretty big acquisition.
Yep.
No clue.
I know you touched on this briefly when I introed this headline at the start, just how it's probably more beneficial for larger companies such as Apple to keep this quiet. But I guess, is there any other reason why they would kind of want to work in the background and not announce this?
I think most large companies want to keep as their product and roadmap strategy as quiet as possible, or talent acquisition strategy as quiet as possible. They don't
Yep.
want their competitors. They want to get people exciting to acquire the same talent as them. So there's
Yeah.
no incentive for them to let people know this is going on. I
Right.
think when you see a large company talk about a relatively small acquisition,
Uh-huh.
it is done to signal to customers in the market about their direction and order staking. So, for example, I don't know, if Apple wanted to go bigger into the gaming market, maybe acquire a small gaming studio for like $50 million, which is not is a nice number, but not material to Apple. Maybe
Mhm.
that can make a big press release about it, and there's more intention to the market saying, "Hey, if you're another gaming studio, maybe you want to come talk to Apple." So I
Yeah.
think if it's not, there's no real upside for Apple or any big large company to talk about their smaller acquisitions.
Right. And we even see that with like their product development and new announcements. They really just work on them behind the scenes. And then it's like, this is what the new iPhone has, or this is what we've been working on. They're not really one to, yeah, I guess
Yeah,
let you.
and again, they're an extreme, but like even like again, let's take Tesla, and again, I don't have any interest in Tesla. Like
Yep.
maybe if they're getting into solar aviation vehicles and they do an acquisition,
Mhm.
they might make that announcement just to say, hey, here's where the future is, get a price in the stock, attract talent. It's almost a PR if it's like a 20 million, $50 million acquisition.
Yep.
But if they're buying some core battery technology for 20 million, they'll probably not announce it and just try to like build in, because it'll give tips on people how they're trying to beat their competitors on a product that's already
Right.
important to them.
Right. I mean, it all makes sense. So, I mean, obviously, completely like sounds like something Apple would be doing, as in not sharing anything. So, just lastly, takeaways, just final takeaways for our community.
We've talked a lot about AI companies the last 18 months or
Yep.
12 months or 20 years. I don't know, it's quite a bit. Minor AI companies are no different than typical startups. Many will have revenue and get
Mhm.
acquired, but very few will have massive exits.
Yep.
Um, Apple likes moving in the background. They're a
Yeah.
stealth company.
Moving in silence. Exactly. You didn't really give me as good of a setup for this next headline, but that's okay. I'll
Yeah.
go right into what we're going to talk about next.
Moving in
TS.
silence, going from public to private.
There you go. Okay, perfect. From public to private. That's a great transition. TSX Ventures seeing another tech company go private. So break down what the news is there for us.
So Ottawa-based True Context announced that Battery Ventures will be taking the company private for around $150 million.
And why did battery, I guess just to maybe start here, just why make the purchase of True
So,
Context?
look, when a company's public
Yep.
and the company takes to go private, what they're basically saying is there's one of two things. Either the company's completely undervalued by the market, and so, hey, we're getting a deal, or the public market is too reactionary to short-term investments, and so the company's better off being private to think longer term.
Yep.
That could be, in this case, uh, you know, they Battery probably saw significant value in taking the company private to improve its revenues or margins, has to make an investment. So it's basically a mismatch. Either there's a significant gap in where the current cash flow is versus market value,
Yep.
or the company doesn't feel that they can make the investments to be best position for long term. It's better to be private. So it's a failing in the market understanding the company. It's been interesting. Over the last couple of years, the number of publicly traded technology stocks on the Canadian Stock Exchange has shrunk. It's one thing to see companies that not go public, but we have seen many public companies go private. This continues to trend. Earlier in the month, we saw MDF Commerce get acquired by KKR. So what we're seeing here is Canadian companies not only go public, but can get more private. And there's an implication for private markets. Canadian public markets may not be offering high enough valuations or supporting the companies needed for long-term growth. And the costs of remaining public are quite high. There's fees, audits. So it's a disadvantage for Canadian tech companies and investors, because Canadian companies may not want to go public and may only think about going to US markets, which have a higher revenue bar. So mean companies have to stay private longer, and may dampen Canadian startup valuations. And the second thing is Canadians that want to buy Canadian exchange ETFs will get less, exposure to tech, which is supposedly driving growth. So it's bad for Canadian companies and Canadian investors. So I just, maybe we should talk about how this affects founders.
Yeah. Yeah. That's probably a great next
Well,
thing to feature.
I think Canadian founders now have to think about what's. There's an interesting thing. U.S. markets have rebounded. Tech's gone up a lot in valuation. Canadian markets don't seem to be as excited about being publicly traded tech companies. So this mixed message,
Mhm.
um, may impact the private valuations for Canadian companies. And it also implies that we have to really, the TSX Ventures had a lower bar for getting public with revenue wise. So I
Yep.
think revenue wise, this means Canadian founders have to think about how do I get to 100, 200, 300, 400 million revenue before I go
Yep.
public. And I think we can see a lot more large private equity firms poking around the Canadian market for acquisitions.
Interesting. Okay. And just final, I guess kind of a two-parter for our last segment. So we have a shout out to Joyride, and we'll kind of explain why we want to shout them out. And then also some breaking news from Brim that was just announced yesterday. So why don't we start with Joyride? What's the news?
I also may have some rumored news too.
Oh, great.
Joyride, Canadian-based, Toronto-based company, raised $5 million USD by Yamaha Canada.
Yep.
They basically provide software for like scooter, like rental companies.
Yep. Yeah. And so why are we cover? I know with the TechTO connection, but why are we covering this? What's the connection there?
Jared Goldlust is the CEO. He used to be he helped TechTO scale. He's sort of like the managing out. So I just love to celebrate post TechTO success.
Absolutely. And I know that's something you always encourage like volunteers or us. It's like we hope that you end up, becoming entrepreneurs and building a business. So great to see that, he's doing that and he's very successful. So what was the breaking news we heard yesterday? If you can just break that down for us.
So Brim Financial
Yep.
announced a large round led by Export Development Canada. I think it was 85 million Canadian Series C. Had support from Vista Growth and White Owl Group, Epic Ventures, and Zions Bank.
And I think I know why this would be very interesting to talk about and to discuss, but why do you think we should care about this announcement?
I think a few reasons. We haven't seen many large fintech announcements. It's great to see a fintech company growing, raising money. I think it's also a story of a pivot where they had a core technology. They were offering their own credit cards and loyalty programs.
Yep.
And they realized that a lot of other financial institutions liked the underlying infrastructure and said, hey, can you power our credit cards and our loyalty programs? And they made the pivot, and they've been off to the races ever since. And
right.
Another great thing, it's a female-led company. I think it's the largest female-led.
The largest announcement. Yep.
Yep. So, largest fintech deal in a while. A great sort of a pivot, great female-led company.
Yep.
So a few reasons I wanted to cover it.
Yeah, we love to celebrate this. Any takeaways before you share your rumored news? I'm very interested to hear this.
I think a couple things. They're able to raise around because they have solid growth, and again, this is money to fuel future expansion into the U.S. market. So this sounds like more here's someone that's putting fuel in the fire. Has good. My guess is they have strong unit economics, strong growth, strong market opportunity. So that's why the large rounds are getting done now, not on future growth, but like here's a proven playbook we're investing in to grow faster. I think the other takeaway here is always be aware of the largest opportunity. You may have something that's working, but some pivot or some change in how you operate your business can get you to a bigger opportunity, which is here. So they went from solid growth to epic growth. And so I think takeaways, always be aware of how you create value, and if you're creating as much value as you can with what you all have.
Love that. Great advice. Okay. Rumored news, I guess.
So again, I don't think there was rumor, like again, just high level. I think there was I saw that Cohere was supposedly raising a $5 billion valuation led by one of the Canadian pension plans.
Okay.
But I haven't seen it confirmed. I don't know if you saw that news.
I didn't see that news, but it sounds like something we should be maybe keeping an eye on, and maybe our next episode will be able to, I guess, delve into exactly what was announced and again, takeaways and why it would be important to talk about.
And we might maybe catch up on news. Maybe we'll do another one next week because we also can talk about Nuvei's. Again, another private equity deal. 6 point again, which so we covered this one other, but Nuvei, which is a bit bigger tech company, is also going private at 6.3 billion USD dollar deal. So a bit more news to catch up. That one just broke a couple days ago on April 1st. So
and there was also news from our friends at Zayzoon too. They just made an announcement also. Again, it's always nice to see, the folks that we've been talking to and kind of keeping up with their businesses, just how they continue to grow. I think it's very very exciting, and it's obviously very inspiring to our community as well. Anything else that you just want to touch on before I just go into a little bit of promotional stuff?
Well, we'll be in Montreal. Come to check us out in Montreal. I think it's 2 weeks from now, next week.
Yes.
Yeah, and then back in Toronto.
Yeah, so that was just going to be my next thing. I was just going to go through it's okay. Our events, April 16th in Montreal, as Alex said. We're excited to be back. April 24th, we're back at Rotman for TechTO Together. May 9th, we're bringing travel TechTO back, which is awesome. Max Tremaine of Sherpa is going to be one of the hosts, and we're doing a travel post-COVID versus pre-COVID. So just how travel has evolved and everything you need to know. That'll be very cool. May 15th, TechTO Talent, looking for a job, looking to hire, or just looking to learn. It's a great virtual event to attend. And last one I'll just mention, because it's a lot, is May 27th. Again, back at Rotman. So visit our website, techto.org. Everything will be there. You can purchase tickets, learn more, see events as they're announced. Summer Social also is in June 17th. It's a little bit farther off, but that's a big one.
That's going to sell out. That sells out every year. That
will sell out. It's also at the Slip outdoor event, kickoff to Collision, and also kind of a kickoff to summer, which it's my favorite TechTO of the year. One of them, at least. Anything else from your end, Alex, before we sign off?
No, that's it.
Good to go. Okay. Well, as always, great to see you. And thank you so much for your insights. If you enjoyed today's episode, don't forget to like and subscribe wherever you watch or listen. We will most likely be back next week, but if not, we'll see you in a couple weeks with more news and announcements out of the tech ecosystem in Canada. And until then, we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea. So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.